We're back on Morning Movers. Amazon moving higher this morning after announcing its latest push deeper into generative AI. This time, Amazon will be testing shopping and health assistance with some users. It will have a wider rollout later. The trial feature, dubbed Interest, allows users to describe their interest before finding relevant products for the customer. Amazon's blog said the feature is expected to be rolled out to all users this year. With that, time now for Options Corner. Joining us to take a deeper look at Amazon, we've got the one and only Tom White, senior options contributor and co-host of Fast Market. All right, let's take a look at this chart for Amazon and tell us what you see when it comes to this chart. I know, like much of the Mag 7, it's had a difficult year so far, but what are the trends telling us?
Well, first we're going to look a little bit wider as far as duration goes on Amazon to kind of get a feel for where the stocks come from over the last 3 years. First chart that we're going to have is 3-year, 1-day chart, but you can see here those lows from 2.5 years ago, just below $82 a share. And we've had a spectacular rise. But then again, you could overlay this chart with a lot of the other big tech names over that time frame, and they're all going to look the same. We did hit those recent all-time highs just over a month ago, and that was above $242 a share. So that gives you, perspective from 3-year chart. I've got another chart here, 1-year, 1-day chart. It's going to kind of reflect that we've had some weakness over the last month and a half or so in the shares. Now, I've got a couple of simple moving averages on here also. 200-day simple moving average over the last couple of sessions on that big, massive rally that we saw on Monday. The stock peaked back above there. It had been below it for about a week of trading, but the 200 level is that 200-day moving average. Does that become a new basis for support for this stock? It looks like it so far. Now you got the 50-day moving average that moved below it also, but we're about 15% below those all-time highs. But we've seen a nice recovery here as the market's kind of recovered and bounced off of those lows that we saw just over a week ago.
Okay, so then how would you go about an example trade for Amazon, especially in the context? We did know that they plan to do a deeper push into Gen AI, this new one, Interest. They've talked about how this will work. It sounds like a little more advanced search feature, essentially. I hope I'm not underestimating it, but how would you go about an example trade, Tom?
Well, implied volatility levels have come down over the last few sessions as the stocks rebounded, right? We're back above that 200-day simple moving average. The IV percentile rank, about 40%. So we're below that 50% level that we've seen over the last 52 weeks. So implied volatility levels coming down. So I looked at a strategy that takes advantage of buying a directional biased type of position in a lower implied volatility environment. It's going to cost you less. The risk is going to be less on this. So they report earnings at the beginning of May. So I want to avoid that event, but maybe take advantage of a move higher into the earnings results here. So I went out to the April 25th monthly or weekly options here, 30 days to expiration. So you still have a month for this stock to continue to recover. Use that 200-day simple moving average as a basis. So what we're doing is buying the in-the-money 200 strike call. With the stock trading about 206.5 in the pre-market, that's probably where it's going to open. Buy the 200 call, and then against it, because I want to offset some of the risks on that, we're going to sell the 220 strike call. So a bullish $20 wide call vertical to the upside on this one. We're going to pay roughly about a $9 debit for it. So what does that mean? Well, I've got $900 at risk here. That's going to take my break even up to 209. That's less than 1.5% above the current share price. So buying a deeper in the money call that's got that higher delta, selling something up above the current share price at that 220 strike, creating a bullish $20 wide call vertical here. Like I said, you've only need about 1.2% move above the pre-market trading price of about 206.5 on this, taking advantage of that lower implied volatility. So if you think this thing is going to rebound, this would take advantage of it. And you don't need a massive move to the upside to get above the break even.
So you don't need a massive move to the upside. Do you account for overall market sentiment, or how do you account for overall market sentiment with this example trade?
Well, like we always try to do and try to give on these examples is we're going to stay risk defined on it. So you know exactly what your risk is. $900 to make a potential $1,100. Now, the probability of touching the 210 level, which is above the break even, that's going to be about an 82% probability that it's going to touch that. 215, which would still be a winner, that's about 60% probability of touching that area. And then a 220 strike, about 40% probability that it's going to touch that level at some point over the duration of the trade.
All right, thanks a ton. That's an example trade for Amazon. Thank you, Tom.